before this month draws to a close, the International Finance Corporation will be issuing a Naira denominated bond, which will be used to support the organization's development projects in the oil-rich nation. Now, this will be the first local currency offering by a supranational and the IFC, particularly in Nigerian currency. Now, joining me in the studio for more on this is Jingdong Hua. He's the Vice President and Treasurer at IFC. Great to have you in the studio with me, Mr. Jingdong. And I guess the first question I want to ask is a nickname this bond was sort of given is the Niger bond. Can you give me the story behind this?
Well, first of all, good morning, Uchi.
Great.
I'm very happy to be here. As the first foreign issuer and first supranational to issue in the domestic market, we have the honor of naming the bond with a nickname. As everybody would know, a foreign issuer in the US is called Yankee. In China, it's called Panda. In Hong Kong, Chinese yuan market is dim sum. So in Naira, it didn't take us very long to come up with the name Niger, because we understand that Niger aptly captures the spirit of Nigeria. Yeah. I think it represents the optimism, the self-confidence, the industry, the hard-working spirit of Nigeria people. So I think this is a very, very catchy name, and we are very happy with the name.
Right, very interesting there. But give us an idea, what's going to be the size and tenor of this bond once it comes into play? And of course, we know now that you finally got that regulatory approval to go ahead with it.
Well, in considering the size and tenor, bear in mind this is a first ever foreign issuance. We want to make sure it is very successful. So we'd like to have a tenor that appeals to all kinds of investors, from banks to insurance company to pension fund. So we have settled on a 5-year tenor, which also is a typical tenor of our project. So it will be a 5-year bullet bond, and the size will be about $50 million equivalent.
Right, and I understand right now you're on a pre-deal roadshow going around Nigeria looking for investors. Give me an idea, what sort of reception, are you seeing for this bond? And I'd love to get an idea, why Nigeria, why now, what's in our markets that makes you feel this is the right time to issue this bond?
Thank you, Uchi, that's a great question. So we were in Abuja yesterday, and today, for the whole day, we will have investor roadshows after this interview. And the reception in Abuja was very, very positive. And I think especially pension investors who are looking at alternative investment asset, because right now, primarily, they invest in Nigerian sovereign bonds. And I think it is very important that asset managers can have a wider choices of assets that they can invest in. Now, the timing works out very well because, as you know, there is momentum going on in terms of recognizing that Nigeria's market is starting to take off. As you know, JP Morgan has recently included the Federal Republic bond into their emerging market government index. And Barclays will soon, in March, also include Nigeria in the bond market. So these are truly actions that are putting Nigeria on the map in terms of capital market. So I think IFC, as the only international financial institution exclusively dedicated to developing the private sector, including the capital market, I think it is a very good time for us to also participate in helping with the development of the local capital market.
Right, and you mentioned that your focus will be in priority sectors in Nigeria, infrastructure. I'd like to get an idea, what sort of projects in terms of infrastructure are you looking at putting this money towards?
Indeed, as you said, Uchi, infrastructure is one of the biggest challenges in the region. As a matter of fact, in Nigeria, access to power is a major challenge. So I think we are working with our sister institutions like the World Bank and MIGA to look at ways that we can help with the private sector, working with regulators to see whether we can address this issue rapidly. So in terms of working with private IPPs, working with privatized distribution companies, and hopefully we can, contribute to resolving this power shortage issue. Now, outside of power, certainly transport, road, logistics, railways, these are sectors we're also evaluating possibilities. But beyond physical infrastructure, there are financial structures. For example, how can we help develop a vibrant, healthy housing finance market? Right. How can we address educational issues, healthcare issues, SME financing, and microfinancing? These are all the sectors that we look at. As a matter of fact, Nigeria represents the largest volume of right. our investment in sub-Saharan Africa. So I think we look at the market, and we see a lot of opportunities going forward.
Right, and what are your plans in the rest of the region? I mean, you did mention to me earlier before we went on air that in May last year you launched the Pan-African bond program, and I certainly know that you have plans in Ghana, for example. Give us an idea what your plan is.
So indeed, Uchi, I think we recognize working with the private sector that is, in order to develop a vibrant private sector, because after all, the private sector creates over 90% of the jobs. So it is central for eradicating poverty and creating shared prosperity. But for private enterprises to have full access to finance, you really have to develop a vibrant and liquid domestic market, because a lot of the SMEs and private enterprises generate revenues in their domestic currency. So if we could help provide local currency financing, then those companies can focus in growing their business instead of worrying about foreign exchange volatilities if they had to borrow in foreign currency. And therefore, our Pan-Africa Domestic Medium-Term Note Program is IFC's flagship capital market development program for sub-Saharan Africa. So we have started working with about 10 African markets, including, as you said, Ghana, Nigeria, and other right. countries, so that we can make a concerted effort to accelerate the development of the local capital market.